Hey, it's Mike with PriceActionTradingSystem.com, and it's Tuesday. It's September 14th. This will be our chart lesson for the day. And I thought I'd start out by looking at the daily chart again. As you see, we continue to push lower. We're getting some bounces here. We're still not down into that green territory yet, which is where you can see we've bounced the last few times. So my guess is we're probably headed to that target at a minimum, maybe down. Maybe even further. I mean, we could be rolling over here. I find that hard to believe because every time we've had one of these sell-offs, it felt like that, and then we rally to new highs. So I'm not ready to say this market's done yet, but we were overdue for a correction probably, and we'll see what happens from here. But it looks like we've got some more room for some more down movement here. But just notice the last few times we bounced around that green. Of course, we pushed a little lower each time, maybe not here. So we could be coming back to retest this breakout. Notice we never really tested that. We had the little failed break lower and went higher, and we never really came back and tested this. And generally, you'll see prices test those breakout areas a few times. So that could be our target. That may be where we're headed. That would get us into the green bands here inside that probably. So that could be our target. It's hard to say yet. The real key is that we didn't make either of these targets. This target's really irrelevant now because we've made a low here. So let's assume we bounce. We would look for our target there now. So in fact, I'd probably be more inclined to look at it like that. And wherever we bounce from here, that would be my next target. I'm assuming that's down in here, right in here. That puts us up here. The red target is still in play at this point. Unless we go below this point, it's still in play. So that's kind of what the targets look like now. Actually, I'm just guessing at this one. Just assuming let's just assume we bounce off that support. That would be the target. And that puts those really close. So when you start to get multiple targets in the same territory, then pay attention to them. Of course, this blue target, we've passed it now. It played out almost to the tick. So a lot of times when you don't reach these targets and you turn down, though, that means you're going to have a pretty good sell-off to the other side. So we may correct a bit here. We'll just have to see. Right now, this market looks fairly negative. We had kind of a little bit of a bounce yesterday, but it sold right back off and we went to new lows. So I'm not convinced we're done to the downside yet. I think we've got a little room to go. This channel's still in play. Even though we opened outside of it, we didn't close outside of it. So there's been no close outside this short-term channel here at all. So we could still have a ways to go. So we'll just have to play it by ear and see what happens. But anyway, I wanted to show you that daily chart. I've been kind of putting that up from time to time just to give you a look at it. But there it is. So let's go back to the intraday. Okay, here's our 2000 tick chart for the day. We clearly had this two-tiered blue channel working down. We had a break here and a couple of legs down to a new low. And we found that support right here at a measured move. I measured this leg. That's really where the downtrend started. So you measure that leg, and that's where the second move down started. You might move it over to here because it looks like we made a little higher high right there. So technically, you should probably measure from there on your second leg down. And you might even look at it like that. If you do it that way, we really didn't get a measured move down. But that was the first leg for the most part. And so I would measure either from here or here. And you really get the same target almost either way. This one you can see looks really accurate. So I'm guessing we had this first leg, and even though it took a little doing here, we ended up getting two measured legs down. So there's a couple of ways to look at this too. Notice the gray channel. There's no doubt that gray channel looks valid and accurate. You can clearly see prices. Let me zoom in here a little more. You can clearly see prices working off both sides of that midline. That trend line appears to be holding. But I started off playing this green channel, and you can see it plays out much better following the channel, and that's clearly moving sideways. I mean, right here, there's not much of a downtrend. So technically, really the way you should play it off the first two swings. If you do that, it really looks more like this, which still fits nicely. So, but you get your break and new low here before we rally. So it doesn't really matter. Honestly, I think it plays out better like this, so I'm going to delete that channel. But I wanted to put it on there because sometimes people will see one versus the other. And if your chart's a little different, one of them might fit nicer than the other. But you can clearly see the channel was in play here. We had a failed break lower, or we actually had a break lower that went a perfect measured move. That's what this blue line is an equal measured move to the channel. And I mean, it's to the tick, and then it bounces. We run back up. It finds support. It fails on the breakout, and that sends prices lower again. And you can clearly see we came back and tested it when we came inside there. Once we pushed through it, we found some support there. Then we pushed through, pulled back and tested it. We actually tried to test it again here on two legs up before we made that next leg down. So I believe that clearly this sideways channel here was the way to go. Gives you a much more accurate read. And then from that point on, I use these smaller channels. There's probably, I didn't draw it, but there's probably another channel working lower here. Oops. Not sure what happened there. Let's just color it so we can. And you can see that one too. And that would have helped you with this trade here, maybe, with these other trades. But I think you had enough reason to take them anyway. So I believe that to be accurate too. I didn't really use that red channel. I just played these secondary micro channels here. And occasionally I'll do that and I don't put the other channel because it starts to get so cluttered that it's hard really to see things clearly. It almost looks like over-analysis. So sometimes I don't put them on there and then I forget to talk about them. And then somebody will send me a question and they saw it, the bigger channel versus these smaller ones, and they're like, why didn't you have it on there? Well, that's why I don't have it on there, because I didn't play it that way. It's there and it's valid, and so there's nothing wrong with using it, but you get to the same conclusion this way. And maybe if you're a little not as, I guess the word I'm looking for is you're not as quite an experienced chart reader, you may need that other channel to see it. So it's okay if you put it on there. And it doesn't mean that it's not valid, it just means I didn't use it. So, but I try to show them to you. I'm going to start trying to show them like I did today, even if I don't have them, even if I'm not trading them, I'm going to try to show them to you, just to slow the questions down and people wondering why their chart looked different than mine or whatever. So, anyway, I hope that explains that for you. But let's back out, talk about the trades, and we'll go from there. All right, early on we had this channel working down. We had a two-legged break, and then we moved to a new low, and we reversed out of there. 7 o'clock came just as we were making that new low here, and then you made a higher low. It actually broke lower and turned and went out the other side. And there's still a good bit of ways back to the EMA, and you can see that this is played out, and this looks a little sideways here, like you can see the EMA kind of, so it looks a little sideways. So you got to figure here we're at least going back to the EMA, and if it is going to be a range day, we may go all the way back to the highs, which we actually go much further. If you took this trade, this was the trade of the day, and there was a news item in here, so you might have been a little leery about entering right here anyway. So that's what caused this huge bar. I mean, that bar is like 44 ticks in that bar. So if you catch this move, it's a great move. And really all you're doing is just looking to ride it back to the EMA. And that's the thing about it. Even during the news, the price action's right. And a lot of people tell me they don't trade the 8:30 open because they get whipsaw. But if you're reading the chart properly, it doesn't matter because the price action is all, it still follows through even during at the open. And you can see here we had the channel working up, the close outside a new high, and then we start working down here. Uh, unfortunately, there's no setup right around 8:30. There is a little second entry short right here, and you would have got burned on it, but there's no reason to be going short there yet. You want prices to prove that this uptrend is over, and you don't really get that until we get down here. So it's really hard to know what's going on right here. If you'd have gone long on this second entry here, actually the second entry is right there and there's no setup, but assumed you looked at this as support and a break lower. There is a higher low here that would have been a better entry, but there's no setup. So that's the only place you might have entered and it would have been long. And there's no shorts in here. There is a second entry short, but you never take a second entry short in an uptrend when everything's still above the EMA, right into the EMA. It's just not a good, it's not a high probability entry. So there's nothing here at 8:30 to really trip you up other than a bad read. The price action is relatively straightforward. But a lot of times right at 8:30 you'll see some great setups. I mean, if you'd have had a very negative bar right here, or if this would have even broke higher and then turned down, you probably go short there. But you don't get that. But notice what does happen. You make that new high, you draw your trend line across there, working down, and then prices try to make a first entry, and then they make a second entry, and they hit that trend line, and you get that big bearish bar. I like going short there. This almost scared me away from that, making this inside bar, but notice how everything's still closed. Even though it's trying to go higher, it's very bearish. I like going short there just to try to get the scalp back to the lows. It does make a lower high here, but not a good enough signal bar. But then it makes another failure here. So that's a failed second entry long trap. It doesn't look like it trapped a lot of people, but when it made this third one, notice that's a new swing high. So there's a first entry, second entry. This time it's not long before it takes off. And there's actually a first entry, second entry right here, but this is not a good enough signal. That's your signal bar, and it's too bullish. So you can't go short there. It's unfortunate. So if you didn't get in over here, you probably don't catch this trade, or up here. And if you don't get in there, you probably don't catch this trade. And it's a shame because that's a very nice move. And you don't know that move's coming. I mean, at first it just looks like your channel is working down right here. But this thing, once it starts expanding here, you got to try to figure it out. And sometimes it's a little hard to figure it out until it bottoms out. Occasionally you can find another look at a midline or something that'll help you. But in this case, you do have the midline right off of this little swing here, but that's not enough to really help you there. You can see it pushes through and comes back and tests it. That's a good sign. But this one was a little hard to find. But you just had to wait and be patient. Finally bottoms out here, but this market's so weak that it can't even get back to the other. It has to trade down and then sideways almost to get back to the trend line. But you got to be careful about that. So. And really what we're doing is we're just trading sideways here, and this just expands. Really what you have is a two-tiered channel here. And you can see that after the fact. But the way you figure it out is you start with your original channel, which was here, and you make your measured move, and you put your measured moves on there. But after the fact, it's pretty obvious. That's just a two-tiered channel, and you can clearly see that. You can see we bounced down here again before we pushed lower. We came back inside and found support a minute before going lower. When we broke out up here, it failed pretty quickly. So it's obviously a channel. But anyway, we run down here, we get a bounce, and we try to go higher, and this actually breaks higher first and turns down. That's such a bearish bar, it's hard to ignore that. I like going short there. And you might have even entered it on the engulfing bar because that's probably going to trap some longs. All these people that got long here are going to have to exit. And you can see how quickly that runs down. Then it comes back and gives you the true failed second entry long here. And so I like entering again there. Plus it's a triple test with a little failed break higher. And it drops on down, and that's right off the midline there, and that pretty much confirms. I mean, you have this low now, and then you see that midline confirming each time, and it drops on down again, and that's when I drew the sideways stuff. Bounces, and this is just too choppy. This did break higher and turn down, so it's a possibility you went short right there on an engulfing bar, but the fact that it's all inside these, we've been going sideways here, I'd wait, and you just don't get anything else. And then finally you get a first entry, second entry here, but that's your signal bar. It's too bullish. We come back and make a lower high here, but you've got some support across there. And so I'd be very leery of that support that's right across there. And this was right to a measured move here as well. So when this went down the way I originally had it. So you can't enter there, and I just don't think it's worth entering on this lower high because your support was really right across there at the time. This looked like a failed break lower. We bounce here. You don't want to be going long yet. As tempting as that is, just stay away from it. And I think the only long I have all day is this green one. And the only reason here is because we're not back to the trend line. We're bouncing off the midline. We're bouncing off the EMA, and you got a second entry long with a very nice signal bar. Let me zoom back in here. And this is the trade right here. And you can see the new high, first entry, second entry. And it really looks more congested with a little pullback. But you figure this is where we're headed. We actually go a little higher than that, but once you've got getting this close, I don't see any other entries up here I like. There's another second entry right there, but you've got this channel working up, which this is off a little bit. This is like this. And that's your first break. You got two legs up now, so I don't think you want to, and you're right into this. This is an engulfing bar. You might have entered there with a little room, but right here you don't have much room, and you don't know that it's going to break higher. So I just don't think you want to go long there. This was the only one I would consider risking, and I'd still consider it aggressive because it's the first break of that channel, and we're not back to the trend line. And you got a little congestion here, and you just had a little break outside of it, so you're probably going to test that high again on the congestion at very minimum, but you're probably going to here. And then we do, you make that high. Then you make a lower high here. I don't think I would wait till down here to go short. That's a huge bar. And it's right. That's 13. It takes 15 ticks to trade that with the buy or with a sell stop and a safety stop. It would take 15 ticks. And you really have to, the only way you could really enter is that if you traded the engulfing bar. And you're still above the EMA at that point. So I'm not sure there's a trade there. I marked it. It probably should have been green, but it's a lower high on a range where you've had some resistance already. But I wouldn't go short way down here. I don't know if you got enough ticks there. I don't think you did. Well, there's five ticks, so you probably wouldn't have made it unless you got a little better entry on this. So like I said, if you traded the engulfing bar, you got more than enough room. But if you wait for this bar, I think you're going to have a one tick failure there. But it runs up here, breaks out. That one's tempting right there, but it's a little bit congestive and it could snap back like it does here, but it just turns back down. And I don't think you want to go short yet because you're still above the EMA and above the resistance, could act as support now. But it pushes on through, pulls back. It gives you a failed second entry long, a bearish bar, and that thing takes off. And you might have even considered entering here because it breaks higher again and turns back down, and it does work as an engulfing bar, which means it's probably going to take on off. So there's like a second opportunity here. It doesn't fit any of our, it's just a first entry basically. but you got the failure and then like a lower high off that. So you might look at that as a lower high and take that trade, but I think that's a little risky. And of course we keep working down. You only get a first entry there. You've already bounced off the low. I'd at least want a second entry with plenty of room back to this support here. It doesn't end up mattering, but it goes straight on through, but you don't know that, so you can't risk that at this point. And then we get this breakout, and this is almost a repeat pattern. I forgot to mark this one. Where was the other one? There was one somewhere else. I guess it was right here. Somewhere. That's not it. I don't remember where it was. Oh, it was over here. You can see that. It looks a lot like that pattern. So you might take that trade back up. We've already had a close outside and a new low, and we're way away from the EMA on a higher low with a nice bullish bar. We're probably going to at least come back and test this EMA and probably the support and see if it acts as resistance, which it doesn't. It pushes through. So you may take that trade. It's just dangerous picking bottoms like that. You'd rather have a reversal pattern here. But notice too that we do have a break of the blue channel in the new low, and there's more than a couple of legs down, although that might be just one leg and you may get another one. So I didn't show you the measured legs there, but they would have looked something like this. Yes. And we came up short of that. We couldn't get through. The other measured leg held, that support area held. But anyway, that's close. I mean, it would have still gotten you. And you see how we continue to try to go lower before prices gave up. But you may go long there. You definitely don't want to go long right here under the EMA back into all that resistance. It doesn't matter. It pushes up. There's actually a little break lower and turn higher there. And this is like a reversal, but you want it to be above the EMA and above that support there, and it's not. It does turn back here and then turn up, but there's a double top there, and that's risky. And you see it doesn't go far before it fails. But notice you got a new swing low there. It's lower than that one right in here. Let me make this a little bigger. This swing low is lower than that, so that's a new swing. So you get a first entry and then a second entry, and you got that little congestion with a little failed breakout. You're probably going to at least come back to the EMA, and you're probably going to come back and test this support, because this is the key support resistance area that prices are working at the moment. So we're probably going to come back and test it, and if not, we'll test it from underneath, which we did, and it doesn't hold. So I like going short there. There's a lower high here that's tempting, but it's right into the EMA, and it's really close to that low. Turns out to be a great entry, but it's just not worth risking. And you make a new low, you get a first entry, and then you get a second entry, but you can see how congestive that is. And then this is an inside bar. It does tick higher on a little breakout pullback, but you got to go short at the very low of the day, and that's never a good idea. And you see it's not long till it would have come back and stopped out your stop, only to go lower. So that's what they'll do to you when you try to enter like that. It's just too far away from the EMA, been away for a while, right at the lows. You just don't want to go short right there. But if you wait, you get this entry right here. Notice you got a double top. So you got a first entry, second entry, but this is a second entry short here. This was the failed second entry, but like I said, it's just too close to the lows. But then you make the new low and you get the first entry, second entry, and you get a real small bar, very low risk. I mean, there's 5 ticks there. I mean, that's almost a no-brainer. And that's a quick move to a new low, and then we bounce out of there. And so now you've gotten your break of the blue channel with 2 legs down, but we still didn't rally out of there. We only just went sideways. I mean, there's a little bit of a rally up here. There's a failure right there. It would have worked, but I'd still be looking for shorts actually. You can see this break move to a new high, and I like that as a short. There's a lot of resistance right across there, and it's like a little I don't have the line on there. Let me just draw it for you. You can see that resistance. It's like a little failed break higher. So we'll probably snap back to the EMA at a minimum, but it just keeps going lower. There's actually a little range here. I should just go ahead and draw it, so some of you may not have seen it, just so you can see that range. Make it gray. There's a clear range right there. And I like that. You're better to wait on the lower high, which comes here, not a very good entry. Then you get a first entry, second entry, and I like taking that second entry short. Generally, when you're going sideways here, you're not that interested in second entries, but this is just still a very strong downtrend, and we're still trending down. There's no reason to until we bounce down here a few times. You want to continue to assume we're probably going lower. You don't want to enter right into the support though. So there's no entries down here, and I don't see anything. We're not getting rejection, so there's no reason to go long. Even here, I wouldn't try to go long. There is a triple test here, but look at the little congestion. It does rocket on out of there, but this isn't looking like rejection right here. And so I'm a little scared of that one. You might ride it back to the EMA on a scalp. I mean, it's a possibility. It's a high or low here, but you don't want to be getting long into this, and that takes you into 3 o'clock. So this is almost a 30-minute chart lesson. A lot of little intricacies in this chart today, but as you can clearly see, it's all downhill really. Yeah, there's some rallies in there, and that's one thing about a good bear trend that goes for multiple days. When you'll sometimes get some super strong bullish moves and bullish days within those bear trends, and take advantage of them because they generally last. If it's a trend that lasts all day, sometimes they'll go strong all day. They might even last a day or two, and then the selling comes back and it comes back stronger than ever. But you'll get these. We didn't really see one like we did yesterday. We had a really strong bounce at the end. There's a decent bounce there. Looks like we're going to get one here, but they all run back into the selling again. So just follow the price. Just follow the rules of the price action. This is the first break of that channel. That tells you there's going to be some more down movement. And so just be prepared for it. Don't let these little rallies fake you out, and be careful buying them because some of them will end quicker than you expect they will. So I'm going to wrap this up because this is getting really long today. We'll be back again to do it tomorrow, but I'm done for today. This is Mac with PriceActionTradingSystem.com. We'll see you next.